Hi, this is Dean Jenkins with FollowMeTrades.com, and this is the weekly market update for the week coming up of January 3rd, 2016, the first update for the new year. And I just want to pause and wish everyone a very happy new year. Hope you had a great celebration. We sure did. My wife and I hosted we have a teenage son who's 17, a senior in high school, and he had about 20 friends come over to our house and they celebrated here and spent the night, and it was noisy and chaotic and messy, but we were just really happy that they were in a safe place, and we enjoyed the light and the energy that they brought into our home. And I hope you had a great New Year's celebration as well, that it was safe and fun, and sure look forward to this next year. So again, this is the market update for the week coming up, January 3rd, 2016, the very first week of this new year, and I think it's really going to be interesting. So I always scan the headlines, and I'm looking at different newsletters and reports and stories and stuff. I'm really interested in it. I call my newsletter Beyond the Noise. I think the headlines, the reporters are there to generate interest and to get people to read their articles and to click on the ads and do all that kind of stuff. So it's certainly not information to trade on. But there's some interesting stuff, and in the backdrop, there's some serious information coming at us that helps us as trader. But here's my favorite quote that I have this week, and this is from Seeking Alpha. It's a website that publishes a newsletter and a whole bunch of other stuff. But they said the U.S. stock market took investors for a wild ride in 2015, but in the end, it was a trip to nowhere. That's a great turn of a phrase. I always like good writers, and that's really accurate. I mean, the market was up, it was down, and in the end, it was a trip to nowhere. The markets ended up the year just down just a little bit. Let's look at a couple other headlines here that I think are interesting. So here's an article from the Chicago Tribune, and this headline says, "Easy money hard to find in 15 with the markets cooled by China and the Fed." Boy, that couldn't be more accurate. 2015 was a hard year to trade in. The fact that it was up, it was down, it channeled for a while, ended just a little bit down. There was no easy money. That was a stock picker's market in 2015. Let's look at another one here real quick. So here is CNBC, and this headline says, "Stocks closed lower, worst year for S&P Dow since 2008." So usually I kind of make fun of the headlines, but I think the three we've looked at real quick, that 2015 was a wild ride that went nowhere, that there was no easy money in 2015, and that we had the worst year since 2008. Those are accurate headlines. You can point to the Fed, you can point to China, you can point to energy prices, whatever. There's all kinds of information and reasons for that. And don't forget, we're at the end of a 6-year bull run where the market went nearly straight up for 6 years. And if you've been following me, I've been talking about the fact that there's a normal and healthy correction coming, and I believe it's here now. So before we go look at the charts, I just want to talk about this for a minute. Given those headlines and those realities, that 2015 was a wild ride to nowhere, given that 2015 was the worst year in the market since 2008, and given the fact that there was no easy money, I'm not trying to boast, but I'm really pleased with the results that we got in our stock picks this year. In 2013 we made 57%. That's pretty amazing. The markets were up, just about 30%. They were trending up, and it was relatively easy to make profit. In 2014, the markets were up, about 10, 11%. We tripled that. Again, the markets were trending reasonably well. 2015, a wild ride to nowhere, and they ended up down, and my stock picks ended up 28.63% up for the year. So I'm really pleased with those results. And again, I'm not trying to boast. It's not about getting lucky. It's not about taking wild risks. Again, I have very strict risk management rules that I follow. I maintain a high win ratio by only picking the really best trades that meet my rules. and maintaining a high payout ratio. So all the trades that I take have the potential to make more money than they have the potential to lose money. And just by following a proven methodology, by being disciplined, by being consistent, by managing risks, and only taking the absolute best trades, I'm able to consistently get these results and publish them for my subscribers and take them in my own account. So really pleased that in a tough year like 2015, we were able to get some really nice profits. And I expect to continue doing that. I expect 2016, if you've been following me, to be a bearish year for the market to be going down. And in a down market, if you've been following me, I think there's a chance to make even better profit because the market moves faster and more dramatically in a down market. And using the right strategy, you can make pretty substantial profits, and I'm looking forward to that. So now let's go take a look at the charts. So here's the Dow Industrial chart, daily chart. And if you remember last week, I said I thought that the market was going to, was going to be probably a volatile week, the last week of 2015, and it would bobble around, and that's what it did. I had also drawn these trend lines, and I said I thought, this more minor trend line, if we went above that, it would be an indication, but not anything telling us that something different was going on. And then this upper more major trend line, if it was pierced, if price went above that, that might mean something. So it's pretty interesting how prices, they went just a little bit above this minor trend line, but they really respected it and ended up bouncing off of it. Now, if you've been following me, I think these patterns, based on Dow theory, of lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. As long as these previous highs don't get taken out and this pattern continues, that's the definition of a downtrend. And everything is pointing to this continuing. And if it does, particularly if we do this one more time, I've already said I think the bear market has started. We do this one more time, we take out this low, hey, we're going to take out this low. And we're going lower down to the levels that I projected on the weekly chart. You can look at last week's video, last week's write-up. I gave the projections for where the correction's going, and it's pretty substantial, 30-40% down in both the Dow and the S&P 500. So I think it started. It'll be really interesting to see how things open on the first trading session on January 4th, Monday. We may bobble up and down, but I think there's a super high probability we're going to take out this low and do something like this. We may dance up and maybe bounce off this trend line again here. If it goes up again above this one, that means something, and I'm wrong. I don't think I am. The really high probability thing, we're going to continue down, and the bear correction has begun in earnest. So you heard it here, and I'll continue to update. And we're just going to get some fabulous trades as this really gets underway. Short trades move faster; they're more dramatic. There's a lot of profit, and you don't have to actually short stocks and do that on margin and all that stuff. I publish picks for my subscribers that we use very simple option strategy, and there's also stocks and ETFs that go up when the market's going down. So we're able to trade the down market, the downtrend, with very low risk, without a bunch of complexity or really sophisticated derivative kind of stuff. We can do it really simply with low risk. So that's what's going on. It'll be interesting to watch. And let's go ahead and take a look now at gold and oil as we do every week. So here's gold, and it just is not showing us anything at all right now. It's just correcting. It's sometimes traders call it chop or a complex correction, but it's doing nothing right now. Now, if I'm right and the market begins to head down in earnest, there's a really good chance that gold's going to head up. That this may be the bottom, and it's been put in, and then gold will head up. We'll watch for the pattern. I'll give you updates. Once gold does start up, there's going to be some really nice profit there. Gold has, for several years now is down a lot. It's down a lot from its highs, and even just a corrective wave up there's going to be some substantial profit there, and you can make profit trading. This is the GLD, which is the ETF for gold. It trades just like a stock, and also gold mining stocks, other stocks associated with gold, have the chance to make some really, really nice profit. So not yet, we're not there yet, but stay tuned. If I'm right, the market heads down, there's a good chance we'll see something coming up here in gold, and I'll keep you updated. So this is oil. I'm looking at USO, which is the ETF for oil. Now, oil is a little bit more interesting than gold. I actually took a long trade with my subscribers. We took it on a 60-minute chart, a pretty short-term trade. We made just a little bit of profit. It was pretty good. We went ahead and closed that out. Due to the volatility, we wanted to capture that profit, lock it in. Interesting stuff going on with oil here. It may have found at least a short-term bottom, and a short-term pull-up may take us up on the USO from 11 somewhere up to about $13, which is, about 25% profit in the short term. Does that mean that the full corrective wave to this massive downtrend we've had in oil has started? We don't know that yet, but if it goes above this level right here, let me get my pen out. If it goes above this level right here, continues up like this, then there's a really good chance it's going up at least into this zone right here, about $13. So that's a nice short-term trade. So watch for that. If it goes above 1128, there's a super good chance that's a decent long trade short-term on oil, USO. And if this pattern continues, then we may see a much more substantial bullish correction to this downtrend. It could go much higher than that, 20-30% higher. So that's the story on the indexes, on gold, on oil. Had some fun looking at the headlines. Again, I think the bear market has started, so we'll keep that updated, and there'll be great trading opportunities. Have a great new year, great 2016. Remember, always use risk control when you're trading, and control your risk, control your losses, look for the best absolute trades and profit from those. As always, please send me your questions, send me your feedback. Love hearing from subscribers and just interacting and having good conversations. That's it for now. We'll talk to you next week. Thanks.